Now, the Bank of England's governor has told Bloomberg that he spends around half of his time preparing for the UK's exit from the EU. Now, Mark Carney said, quote, in terms of Brexit specifically, let's be clear, it takes 50% of my time now. We spend a fair amount of time in the contingency planning, but now it certainly does crowd other things. Within 9 months, we could have a disorderly Brexit stress test. We're living these stresses. And you can read that full interview conducted on June the 4th in the latest edition of Bloomberg Markets. Joining us now is Bloomberg's Bank of England and UK economy reporter, Lucy Meakin, and we're still joined by Gilles Moec and Peter Chatwell. Lucy, when you look at the Bank of England, first of all, in this interview, Mark Carney basically says, look, it's contingency planning, of course, for Brexit. But is the backdrop now strong enough to warrant a hike this Thursday?
It's a good question. The market really does think it is. The market is pretty much fully priced for one. But people are saying maybe there are a few questions over it. People are saying maybe it's not quite strong enough. We have seen some uptick since the first quarter, but then again, the first quarter was so weak. The BOE says that's because of weather, and they were looking for proof of that the second quarter would be stronger because we didn't have that bad weather effect. But is the data strong enough is still a question. Also, Brexit, always on the horizon, always an issue. We've had a lot of political manoeuvring, so will that affect people's decision?
And Lucy, of course, on Thursday, so the BOE is publishing new forecasts along its interest rate decision. So what are you expecting? There's also this R-star, which we talked about quite extensively. So how important is the R-star, and what are we expecting them to announce in terms of forecasts?
We really don't know. I'll be perfectly honest. It could be a range. That seems more likely. It could be a point forecast. It could just be a discussion. By doing this, they're possibly putting themselves out there because some people might interpret this as a promise and it could move markets. They will be very clear that it's not a promise and they'll try and push back against that. But that doesn't always work, let's be perfectly honest.
Lucy, is Brexit shut down for this summer? I mean, I can't figure out what the news flow is. Everybody goes away on holiday. What are we staggering towards on Brexit? What's the next that really matters for our audience?
I don't think that the summer means a shutdown on Brexit. I think it means more political manoeuvring, which will have shockwaves onto the Brexit negotiations, particularly now that Theresa May's kind of taken charge, because her future then becomes much more tied to Brexit, even more so than it already was. So, no, I'm sorry, there won't be any let up as far as I'm concerned.
Well, that's good to know.
There might be less actual formal summits, but...
that'll keep us employed, to say the least. Gilles Moec, I know you can go over to St. Paul's and pray next to your Bank of America Merrill Lynch office that you've got here. But what do you see within this linkage of the economy of the United Kingdom, Governor Carney, and the silliness of the back and forth? What's the number one thing you people are focused on?
Well, we're focused, honestly, on the outcome for Brexit, because no matter how you look at the UK, the kind of deals that we'll get, if any deal, by the way, is going to be absolutely central for policymaking in the next 2, 3, 4, 5 years. I'm really interested in knowing what the Bank of England has to say about R-star in the UK. But R-star is based on your assumption on potential growth. I don't know what potential growth is going to be in the UK. It's going to be 1%, 2%, or 3%, because I don't know what the outcome of Brexit is. So I'm actually surprised that Mr. Carney is saying that he still has 50% of his time not thinking about Brexit, because it's all there is to it. I'm very surprised again that the Bank of England would send such strong signals on its inching to hike when we don't know whether or not we are talking about a supply-side shock for Brexit, if it's a demand-side shock, if we're going to spend another year in limbo. It's absolutely key. And honestly, I think it's much more important that whatever we may say about where the PMIs, the retail sales are at the moment, we don't have a clue as to what kind of economy we'll have in the UK in the next 5 years. I don't think you can make strong policy making in those circumstances.
Okay, Peter, I hear a growing number of people telling me that actually the BOE will hike on Thursday, but that it will be a mistake. Mm-hmm. Is that the case?
That's absolutely my opinion, has been opinion for well over a year. So the asymmetry here is quite obvious. The BOE can control the front end of the curve through setting policy rate and some degree of policy expectations, but I expect the market is going to be fading those expectations quite significantly in intermediate and longer tenors on the curve.
OK, but how should we think about this? Is this, a Bank of England, after the fact that a May hike was priced in and Governor Carney didn't do one, that this goes back to credibility, that because the market is now pricing in a hike on Thursday, they need to deliver it?
I believe that's the case. Credibility, I mean, it doesn't destroy the institution, it doesn't destroy the currency if credibility is further lost. But there's been so much commitment towards this. Essentially what they've said is that in May we would have hiked. Now conditions have panned out that we could have hiked in May, therefore we need to hike in August. But I was discussing with a colleague today, is this a ECB in 2008 or is this an ECB in 2011 moment? It's the type of policy error that we're discussing, not whether it's a policy error.